Check, check, quick sound check. Can everybody hear us loud and clear? Hey, Anne-Marie.
What would I do without you, Jay?
Happy Sunday.
Welcome to Market Kickoff, everybody. We got a big week ahead. Yeah, looks good. Great. Awesome. I'm really fortunate to have Jay tonight because I don't know if you heard this session that I was on Lunchbox Trading this past week. I talked about your high volume 3-minute range bars, and I morphed it and said I was going to use the hourly bars for me because I'm a slower trader. And so the setups tonight, again, we're going to go through all the major futures that I go through, but what I'd love to do with you, Jay, is after I build the setup, I would love to ask you to say, hey, what other things would you consider in terms of getting yourself ready to trade, right? The markets are going to start in about 10 minutes.
Okay.
And I don't normally trade until the first hour is over. And so what we're going to do is just stare these charts down and frame everything out. So we're starting with the ES first. We're going to jump right into it because there's tons to cover. And we're here on TopstepX. I want to show you a little bit about what I've drawn. So on the hourly chart, I've looked in the past several days and I've looked for the highest volume candlesticks and I've drawn a box around those time frames. And so what we notice coming into tonight are a couple of things. One, we're sitting just before the open, we're sitting in a pretty congested spot. We had a high volume area around the region between 59.50 and 58.67. And we had a pretty high volume candlestick at 3 p.m. Eastern time into happy hour. And that really is where we closed after everything got settled. So my thought is always, hey, let's take a look at this volume notion, which truthfully, Jay, I don't use volume very much.
Okay.
And staring this down, I really feel like I need to. And so I've really enjoyed adding this to my framework this week and just widened out the ranges a little bit to see if the trading areas would tell me what's going on. So first things, if you're taking notes, the expected move to the upside is 59.88 for tomorrow. The expected move to the downside is 58.37 and some change. So what that expected move says is that the option sellers have sold the outer bands and they expect price to sit in that range. In the meantime, we've got buyers that went into the weekend long in a big pocket of upside motion. So the trader in me says, all right, if we break to the north above 59.33, these buyers, the ones who were buyers, are going to say, all right, I'm going to add to my position into my next areas of motion. And if I don't stay in there, then I'm likely to run to the bottom of the channel, and everybody that was long here is going to puke everything out onto the bottom. Now, what I notice you do with the 3-minute chart is you wait for the VWAP, which I don't have posted here, but you wait for the VWAP. If you decide to go long, you want to see the VWAP under the price action, meaning as support, and then you want to see it get out of that 3-minute range.
Yep.
And so since I'm using the hour, I'll use a buy stop up here because the hourly formation tells me where everybody's been sitting and where, if they're short, they're going to have to puke. And if they're long, they're going to add to their position. So if you are thinking about this as a viable way to trade using the mechanics that you use, let me go ahead and put up the VWAP so that swap, no Anne-Marie, VWAP. Oh, that's bizarre. There we go. And so now my VWAP is here. I'm going to make it a brighter color, like, oh, which one do you use? Which source do you use?
Uh,
Open, high, low, close,
I, I
or?
I changed mine to open, high, low, close 4. But what I've realized is on a
Yeah.
shorter time frame, they all look the same.
Ah, gotcha. All right. So style, I'm going to change it to something very loud. And so we can see where we are right now in terms of our framework. We've got the VWAP moving to the upside in general, but we are above that big volume candlestick, or we're in that big volume candlestick on the close. So it'll be interesting to see if we gap up or, oh, thanks, Tech. I appreciate that. If we gap up or if we gap down. So one of the things that I'm looking at is momentum underneath here. It's rising. Price action was falling. So we've got a little bit of a cross current. Once we get up over those moving averages, you can see that momentum has crossed positive. So my expectation is that if we pull back, which would be nice, if we have a little dip down, it'll be a buy zone that'll take us to the top of the box. And that's about, if we opened up right at around 59.07, that would be great. And then 59.32 would give us our first targeted event to the upside, and then we would stair step it down. Do you have a bias for this week?
I don't. I try not to. I try to do exactly kind of what you're doing right. Switch over to my charts really quick. Try to do exactly what
Yeah.
you're doing right now and
Okay.
just frame out some higher volume areas. You know, there are traders that don't really love the volume by time that we're using on the bottom of the charts, and they use volume profile. But very similar, if we look at volume profile from Friday, we have that point of control, which is down at 59.07, exactly where you just kind of pointed out the lower extreme of that box, right? So volume point of control is sitting right there. Makes sense that we had all that volume at that last hour. So exactly what you just said, Emery, I would do as well. I have VWAP attached to this that 1 hour candle, and it's flat right now, right? We only had another hour
Yeah.
of data. So that VWAP is
Yeah.
flat, but I'd be looking for exactly that, right? How does the market respond to this range? If price leaves this range to the downside, does volume go with it? If so, I want to follow that volume. If it doesn't, right? If price leaves this range to the downside and volume stays in the range, I'd be more inclined to kind of buy the lower extreme to then trade up towards that high. But if, like you said, you know, for you where your buy stop is up above 59.32, if volume is leaving that range to the upside, then yeah, I would want to buy up there as well. But this range, I think, is going to be an interesting place for us, at least early on. Like you said, though, I don't trade
Yeah.
the Globex Open much unless it's something very clear. But it should
Yeah,
frame out what
for
happens for the
sure.
rest of the day. Switch back over to your charts.
All right. Super. And you'll have to tell me how to do that so that I can get better at it. Hey, let's take a look at the NQ since so many of us are NQ traders. Um, NQ is doing something very interesting. Relative to the ES, it's got a lot more implied volatility packed in towards the end of the week. If you notice, and I'll go back to the ES very quickly, you'll notice that the expected move and the weekly expected move are literally only about 20 points apart. But if we go to the NQ, they're almost 250 points apart. And that is not usual if you're staring things down. So if you want to know where the traders are saying, hey, listen, here's where I'm going to buy, here's where I'm going to sell. The traders have sold the 21,180 level, the options, they've sold those puts, and they've sold the calls up at 21,543. So we can box this out. The weekly expected move puts us down at 20,957. And the upside area is 21,792. What I think I want to do is really take a snapshot of this because I want us to be able to look back at the end of the week and say, oh, okay, I see how these expected moves went, and let you be able to have some confidence in them as traders and use them whenever you're thinking to yourself, hey, what's the range potentially, and what might I be looking at?
We got a question on that, Emery,
Sure.
from Harrison. Where do those expected move? Where is that expected move data derived from? And we are open now.
All right. So the expected moves come from the implied volatility. Oh, that's its indicators. It comes from, ooh, there it is at the bottom of the box. I want to buy that. See how it holds the bottom of this box, if it comes into it or it fades, because our downside pressure events will move into 58.93 and then 58.67. But where you can find these are in the option chains. They're sitting there. If you have something that has option chains on it, that's the best place for us to find it. Oh, I didn't draw this box.
You're
Why
looking at
didn't I do
implied
that?
volatility for the week based on options data.
Yes,
Okay.
yes. I'm just looking at the whatever they're telling us that's up there. So very interesting what's going on in the NQ, though. I don't know why the implied vol is so sticky. A couple of things we have to think about over the next 2 weeks. The buyback window is going to be closing, where stocks, the companies can start a buyback program and say, hey, listen, da 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 da. So in the next 15 days, that window is going to get shut, the quiet period before the next earnings event comes out. And so what we'll be staring down is seeing if we can break through these highs and still hold higher under this lower liquidity event. The second thing that we have to watch out for is overall range trading as we get closer and closer to this space where nobody knows what's going on with trade, and now nobody seems to care because it's like, oh, we got another piece of trade news right here, blah blah blah, right? So we got great trade news, terrible trade news, and then no trade news. So it's starting to be noise for everyone, and that's going to make a difference. So if we're staring this down, have we gone 5 minutes yet? No, not
Not
five
yet.
minutes. We'll wait for the 5 minute candlestick. Weekly implied volatility move for the NQ is way down at 20,950 and way up at 21,550. Let's go to the YM. I want you guys to have these numbers so that you can say, all right, I see how that works. For the expected move for the YM, this one's sitting, notice, everybody else, the ES and the NQ had bullish candlesticks. The YM had a bearish candlestick in this range. So this is the one that I suspect goes to the bottom of support at 4,100, excuse me, 41,910. The expected move over tomorrow, the low end 41,609, the high end 42,550. The monthly expected move expiration for the end of June, all the way up here at 43,480 and 41,000 and 44. The option sellers have really won the game in the YM this month. But I do think it's very interesting that while the ES and the NQ left the day with a bullish candle, the YM ended with a bearish candle. And so that's a fair bit of dissonance right there. Let's take a look at micro Bitcoin. I do trade this quite often, and I really like it. And so let's take a peek at what's going on here. Here's the range. This is a high volume candlestick that occurred at 12 noon Eastern. The next high volume candlestick is right where the edge of this volume candlestick was. So if the traders get up over here in this area, it ends up being a place to buy up into the expected move at 107,000 and then through the halfway spot. Notice this is a very big bullish candlestick over here, and the traders lost it immediately.
Yep.
So a lot of people took a bet and it rolled off a cliff. My thought is because it's jamming into two short or downward candlestick formations, it's either going to follow suit or it's going to rocket up into these ledges. So we give it a couple of minutes and then we'll figure out what's going on there. Let's go to the CL. Oh, did I give you the expected moves? Yes. Weekly expected move up in micro Bitcoin all the way up to 109,450. Downside 100,660, and then 103 to the downside for the next 24 hours, and 107 to the upside. So if I were a betting man, I would say the trend is my friend, and I'm going to wait for it to show me that it can't get up over this edge. You know, my thought would be I'm going to put a sell order out here at 106. I'm going to put it at the top of this bearish candlestick, 106,750. And we'll see if that works. So I like that setup because the trend is very obviously doing what it's doing, and my stop can be really tight at about 107,350, 400, something like that.
Okay, so you're looking to sell at that expected move, just for a rejection at it.
Yes,
Okay,
I am. Because the trend is down and because the two heaviest volume candlesticks in the near term are
sell side.
actually bearish,
Gotcha.
right? So potentially I could take, if I were to be really itchy trigger finger like, I could actually take it right here, right? And I'll add to the upside, and then I'll just go, you know what, if I get up over that expected move by about 107, I'll have, 100 and something at risk. But my suspicion is that that's where we go. We head down based on the hourly formation, which I like to look at because my brain runs slow. I can think deeply, but it's slow. And so I try to watch, I try to do setups that fit my brain just a little bit better. You trade oil, right?
I haven't much lately, because it's just been in such a tight range. Uh,
Yeah.
but it's an interesting market. It's a wide enough range. I think that range traders have opportunity in it. I just haven't seen a great opportunity myself in oil right
Yeah,
now.
I think it's pretty messy, right? I mean,
I
surely
agree.
if we take a look at a daily chart, it is, look at this. I mean, if we take a look at a daily chart, momentum completely flat, moving average flat to slightly down, and it's barcoding. Down candle, up candle, down candle, down candle, up candle, it turned to a down candle, really down candle, it turned to so-so. So it truly is caught in a range. Let's take a look from a daily perspective where the buyers take a look. For me, this is a do or die zone because the highest volume candle is back on, what day is that? The 9th of April. And here's the top of that candle. And I mean, you can see it is a battle zone. It is definitely a battle zone here. So this is another one that I would expect to come into resistance and potentially move backwards. I actually like that one too. So let me see if I can frame it out here a little bit better. See where my expected move is and the framework. Here's the high candle. It's well above that. The downward candle, it's well above that. Um, yeah, I'm gonna take a gander at getting just into the expected move. 62.58. It's just a little bit higher than the expected move. So let's see. That's what I like for that one.
Okay.
If you were to play devil's advocate with me right now, what would you say about, hey, wait a second. This is a breakout candle. Here's why this might not give you what you're looking for. I love that cross current of, hey, I know this looks okay, but if you were looking at something else, then if that stinker rolls around without getting me, I'm going to be peeved.
So I'll switch over to my chart really quick, and I'll show you
Yes,
what I'm looking.
please.
I'll show you what I'm looking at in crude oil, and I like the idea of this trade. I know and there was a trader who was asking a question. Any consideration for the news out of Ukraine and Russia going into this week? But in crude oil, I like this trade from a technical perspective because if you look, this is a daily chart, and the purple line I have here is a 50 moving average. The yellow one is the 20, and we really just been ping ponging
Hmm.
between those two. So
Yes.
something could change fundamentally that could move crude oil. But
Hmm.
right now, if
Hmm.
I'm a technical trader, I'm not a fundamental trader. So this is,
Hmm.
if I'm going to trade this, I have to trade what it's shown me so far, which would be shorting the extreme of that range. And we can already see in the spike that we had,
Yeah.
we looked up above that
Miss me.
50 moving average,
Hmm.
and we're starting to trade back down now. In the
Yeah.
shorter time frame, if I go down to a 3 minute chart and we look at that initial volume spike on the open, yeah, VWAP's still in this range as well. So yeah, the fade in back into this range would be the trade at least, target VWAP, if not 50% of this range. Um, but yeah, I like the
Yeah.
idea. What did it miss you by a couple of ticks?
Yes. Dang it.
Yeah, love when that happens.
All
Sweet.
right. So now let's take a look at gold. Oops. All right. So gold is in an interesting patch, right? The highest uh, bullish candlestick in the recent term is this one that occurred at 8 a.m. Eastern Time. And we are breaching it right now. So um, if we go backwards to this one is the strongest one in the area. We just nicked that. Look at that. So there's that 50% overlap. I see this all the time. If I look to the left and find the high volume candles and then draw the GAN box all the way over, I'll see it holding a zone that tells me I can buy. I see it all the time. And the way it comes to me is just looking for the highest volume candlestick that I can find in my space. So I'll pick 2 or 3 of them. Usually there's always one that sticks out.
Okay.
Um, and if this is moving up, then that would be our next space. Implied volatility is really, look at where the expected move is right here for um, gold, we're very close to it. It's like 8 points, right? And so normally gold will blow through its expected move lines and then fade, just like Bitcoin will in general. So the expected move to the downside, 3,287. Expected move to the upside, 3,339. And if we end up changing tack and our momentum continues to lift, we could probably see a pretty good move to the upside in the space overall into um, the 3347 or anything like that. Do you see any numbers up there that you like?
Yeah, so what I'm looking at is at that 3350. I know gold was just in rollover last week. And
Mm-hmm.
we kind of had an inside day on Friday. And the upper extreme of that range, if you look at Thursday's price action, was right around those 3350s. I am bullish gold, but it really hasn't been very directional over the past couple of days. Maybe that's because of rollover, and
Yeah,
now that we're done with it, could we get directional again? If we do, I'm leaning towards the long side, and we have that 20 moving average at 33.24. My dog is getting ready to join me. Give me 1 second. 33.24 is that 20 moving average. I'm bullish above that, and looking for a push to the upside. There was a question in the chat. Gold opened up
sure.
with a gap. Does that gap need to fill before we continue? I'm gonna say no. Uh,
Yeah,
the way I look
yeah.
at gap fills,
Nothing needs to happen. Yeah,
yeah,
nothing needs to happen in the market.
exactly. The minute I think something needs to happen, the opposite is probably going to happen. Uh, if we start trading down towards that gap, right? If we start to get down under 33.25, 33.20, then I'll start to look for a gap fill. But I'm not going to trade with that in mind, especially if the market is going to continue to push higher. But if you have a strategy to trade gap fills, by all means,
Yeah, some people make a living just trading gap fills.
right?
I don't know that I'm not very good at trading gap fills per se. And so, my suspicion is with this one, as we rise, um, we're probably going to run into the expected move and then chop around here. I suspect that gold is going to do a little bit of fading. Let's look at a daily chart
All right, and
in
I'm gonna
gold and
step away for
see,
just a
this is a
second, Anne Marie.
sure,
I'll be right
sure,
back.
absolutely. Absolutely. Thanks so much, Jay. So here's the interesting thing about gold. Just like Jay said, it's been a little bit of a range. This is a 10 moving average, right? And so the goal is not to say, oh, the moving average is up, I'm going long, or the moving average is down, I'm going short. It's about looking at where participation is occurring. So have a gander at this. So the highest volume candlestick that we can see in the recent past is the candlestick all the way up here. So if you're thinking about, okay, let's say all the traders came in and they said, you know what, I'm going short. So my favorite thing to do is if a range fails its 50%, I'm going to be able to take it short. Some of you might be wondering what this wacky blue line is here, and it's the zigzag pattern, right? I think I might have talked about it last week, but it's this one right here in your indicator tab. What that actually does is give you a near-term swing high to swing low relative to the formation that you're looking at. So you might go, well, what does that mean? Here's our most recent swing low and our most recent swing high. It's a lower high, so we've got downward trend, right? Wow, that line is very rowdy. It is very, very rowdy. Okay. I prefer it not to be like that. Okay, so it's downward trending, but you can see buyers coming up from underneath. And you'll notice the zigzag pattern has not drawn a new line. And that's because it doesn't really draw the line until it's 50% past the move of the first zig, and that will bring in the zag. So this really tells us it's any man's game, but we've got, just like Jay said, we've got 2 days of inside motion. And that tells us, hey, we could compress a little more, we could expand a little more. But if you're thinking to yourself, well, what can I do if momentum is down and trend is up? The pullback is going to give you the buy zone. And so for me, that might say, I don't want to buy it here. I want to wait for a pullback that either gives me a long at around 3,308, or I wait for it to break out of the expected move, pull back and hold that breakaway line. That gives me a long. If it fades, I'm right back in the high volume box. So if we don't revisit this box above, chances are we're going to congest. My gut suggests that, my bounces are going to be sell zones. I'd just like to see a nice, pretty place where that actually occurs. So when you start, I'm so excited to have market kickoff. I can't even tell you, because I love framing out the whole week, and I love getting into the nitty gritty that we don't normally see during our very fast paced trading days when we are going through mechanical flow. So let's go to the NQ and see how it's been behaving. So here we are. We're, of course, in our hourly. We're about 20 minutes in. Notice it held the bottom of the high volume candlestick. Now, you might go, well, thanks, Captain Obvious. It's already bouncing. What can I do about that? Here's my thought. A bullish candlestick formation that has upward momentum, the pullback becomes the buy zone, and it's the buy zone of this range. So now what the traders are going to do is fight over whether we get above and continue, or we go below and then head into these boxes. But the boxes give us the clear areas where a lot of traders were fighting. And so if we're thinking about, well, I have overall lower highs and I've got lower lows, so maybe the bounce is only into resistance. That's where Jay's thought of, hey, I really need to be paying attention to whether that 50% motion in that candlestick is going to hold. And so here's the thing. If we look at the 5-minute, there's a 5-minute candlestick. And what happens? They lose it, and then the failed bounce near the open of that 5-minute candlestick collapses right down. It should give us a bounce that we are able to short, but things can change really quickly in a 5-minute formation. My thought would be, if you're looking for a long, wait for it to come down and test this total high volume area, especially since it's already lost that space. Easily, we could be moving down. I've got a little bit of a negative bias across the entire market structure.
That from
I'm
a
going to
technical
try
perspective,
not to act on that.
or is that a more fundamental thing?
I think it's a combination of macro
Okay.
and price action, because we are seeing lower highs, especially, let's go look at the daily on the NQ. We can see that this has been a massive run up, and a lot of our normal indicators are telling us that we are somewhat overbought. So we literally could move sideways. And so my thought is, hey, listen, the bounce is going to give me a sell zone. Now, what I want to caution traders about is how to use these expected moves. Do not, my friends, my lovely fellow traders, do not go, oh, there's the expected move. I'm going to short it right there. You can look at it and go, maybe that's short, but it's got to confirm that it's going to give up that level. And you've got to have trend or momentum or trend and momentum telling you that you're going in the right direction. So don't use these edges as the be all end all. You're going to get smacked in the face. I wonder how I know that.
Oh, I've
Yeah,
done it.
been punched
You've
in
done it
the
once or twice?
face ton of times. Yeah, 10,000 times
Yep.
I've done that, and I still have to caution myself against it. You got to let trend tell you that you're in a formation that's going to allow you to position properly, right? That's going to be super important overall. Let's see what went on with Bitcoin. If this flattened because I have things on silent. Nope, there it is. It's just the zero marker.
Did you
Still
get tagged
dancing
into that
around.
crude oil short, or did you take the offer off?
I took it off.
Okay.
I took it off. No, I still have it on there. Good grief. Thank goodness. I
So
need to make sure of that
I know
one
there
day.
was
Yeah.
an OPEC Plus meeting over the weekend. Some news out of
Mhm.
that. OPEC Plus announces a sharp increase in July oil production. Um, so fundamentally, I think that kind of supports your trade idea there as well. Uh,
So here's the mishmash on that.
okay.
Um, in March, the OPEC came in and said, listen, we're going to curb. Nobody is going to do production over XYZ. Well, Kazakhstan said, I'm going to do whatever I want. And they flooded the market with about maybe 1.5 million barrels or something like that.
Oh wow.
And so everybody in OPEC Plus came together and went, dude, we're supposed to operate as a collective. You pushed all of this into the market. We're gonna pull we're gonna pull some out, and then while you don't produce, we're gonna push ours back up. So it's really a cross current. It's not very clear. On top of that, the Hajj is, I don't know when it is. It's coming up soon. And it's where everybody that takes the pilgrimage, they go into Mecca, I
Okay.
think it is, Mecca and Medina,
Yep.
and millions of people flood the area. And so all the hotels are full, and there's tons of requirements for energy. And so they are punching that stuff into the market so that they can allow for that because all of that oil is going to get used up. So it's clear as mud, is what I have to say about that one.
Stuff. Thanks, Anne
Yeah,
Marie.
you're welcome.
Let me see if we got any other questions for you. We got a question here from Neil. Does the opening range break still work on Sundays? Emery, do you look at opening range breakout trades at all?
Oh my gosh, that, if you look at my morning video, if you go to Discord and you go down to Coach Anne Marie, every morning I have a video. And the video works like this. Once this hour is put together, what I will do is I will take something that maps it out, and I'll say, all right, let's say this is my whole opening range. We don't know where the top is. We don't know where the bottom is, but let's pretend that that is over. Okay. So my opening range trade tells me what it is I can do. And when the range is very big, I'm going to look for volume to hold over the edge and a rocket back, or a failed retest, something that's like a bounce above and then collapses, so I can trade it to the bottom of the range. But that, I love the Globex Open. It is huge. And so a lot of people say, listen, there's no volume there. You know, floor traders never used it, but we're in a brand new game. We have traders from all over trading in the Globex. And the last statistics that I read said that retail traders are more active than they have ever been in the markets. And so this makes this range very important. So for instance, let's look at Fridays, and I'll show you how that one would have been set up. So very tight hourly range. Now, when the hourly range is tight, it means that the charts will usually test below it and go into a volume area, one of my boxes, or test above it and pull back, or do both. And you can see it did exactly that. So normally what I will do is I'll set up a trade that gives us both upside targets and, oops, oh, this doesn't work like Transpire. Hang on. Let's go here, short position. I'll go like this, and I'll frame out that opening range. If it breaks below it, you take the short. If your momentum is flat, you know you're only going into prior support. If you break out, you can take the long, but if the trend is down, you're only going into resistance. And so what I'll normally do is mark them out relative to the volume ranges. And that's what we'll be doing here. But this is a really wide move. I'm guessing this is going to be a buy the rumor, sell the news, because Ukraine did do that to Russia, but I'm not quite sure that all the cross currents it's going to matter. It's just going to be sort of a kind of thing, right? People are going to
Going in a
hear it
teacup
and then
like
they're going
like
to,
D says.
yeah, exactly. Exactly. She said, I was watching her show one of the other nights, and she made a hilarious joke about oil becoming menopausal. And that, for a woman, certainly a woman my age, it was flat out hilarious. But that's why I love Dee. She just says
Yep.
things that are like, what?
Yep.
Hilarious. Hilarious. Okay, so let's see how the micro Bitcoin trade is going. I got to tell you, Jay, I love trading this chart. It's so much fun because the ranges can get pretty wide. And if you watch the volume candlesticks, they hold so well.
Yeah.
I have to give you a hat tip because I've listened to you for good grief, over a year. I've been listening to you talk about that 3-minute volume, and I
Okay.
was like, oh my gosh, it's so fast. And then my brain said one day, well, why don't you use the concept and just slow it down for you?
And
And
you
then it
see it really
was,
works. I mean, that trade that you had in the S&P on Friday, right, based on that same type of structure,
yeah,
I think you wound up buying what was from that point the low of the day, and we just trended into the close, which was a really nice trade. And I love
yeah,
that you did
I
that
took it
because,
all
like
off
you
the
said,
chart.
right, a 3-minute chart might be a little bit too fast, but everything makes sense to you on an hourly chart or a 30-minute chart, and
Exactly,
it's the same structure
exactly.
and the same idea plays out. Um, I've actually been looking at that similar setup on a 15-minute chart just because I think a 3-minute might give more false signals, right? You got to do a lot more filtering on a 3-minute chart. But on a 15, it's been pretty clean. So I love
I
that.
like it. I'll have to check it out. I'll have to check it out. So let's take a look at the ES again, see what we have going on. It's lost the bottom of the box, the range, the bullish range from yesterday. So my expectation is that it meanders down to 58.92. So the question might be, well, can I take a trade there? Of course, you could take a trade anywhere you want. The question is, what's the risk? Have you identified the risk? And is trend and momentum in your favor? If you can identify your risk and then let trend and momentum be in your favor, then you've got yourself a high probability trade. But if you have one or the other, as a trader really trying to uptick the size of your portfolio, it's much better to just go, you know what, I'm going to sit on my hands and see how this shakes out and not be afraid to wait for something simply because you just don't want to wait. Now, I am really dropping the dime on myself because as we go back to Bitcoin, you can see that my thought was, hey, I think it comes up here. But I was okay with taking the low of that candlestick rejection. Remember, the reason I chose it is because it's a volume event and I moved up into it and started immediately reversing. And so that told me, hey, that's in your favor. On top of that, what is trend? It's down. So I have two things in my favor. One, I've got a negative candlestick formation. Two, I've got trend in my favor. The only thing that I don't really have in my favor is momentum, and it's flat. So you might go, why do you say it's flat? The lines are underneath zero, but we've got a few pushes up to the north. So it's really, it's messy. So when it's messy, it can go in either direction. Do you have anything you want
I'm
to?
looking at so we know we talked about the energies a little bit. I'm looking at a potential trade in natural gas, which tends to move a decent amount. And it looks like if we look at a daily chart,
Whoa.
it's on the lower end of the range. Um, on the daily, on a maybe a double
Let's
bottom
look at
here.
the day. Yeah,
So
let's take a look at the daily. Yeah, yeah. Let's see where the volume is sitting for these guys in the near term. So high candle is way up here at 3. Now it is getting to be summertime,
right,
and so nat gas should start to lift. Should. I don't know if it's gonna, but it should start to lift. We've got 3 bottoming formations, really. And then you can see every time we were here, if we dipped below, it was a buy zone. I like this. I like this trade. Let's see where we've got a negative candlestick formation here. So it's got to get up over 355. It might not be bad to have a buy stop at 3 3.587,
okay, on the
right?
breakout.
So yeah, so on the breakout, now the question would be why, and then what kind of target are you looking for? So if I choose the buy stop there, let me see if a 4-hour formation gives me. Okay, I've got negative pressure here. So if we breach that, we're going to move into the top of this candlestick, more than likely. And then we've got another negative pressure candlestick here, which is at the base. Oh, look at this beauty. Watch this. Man, I'm such a nerd, but I totally love this. Watch. Okay, check this out. Here is the high volume candle, 4-hour high volume candle from 3 days ago, 4 days ago. All right. So the low of that candlestick is right here. Here's the next high volume event. It's the high of that candle and the low of the candlestick from 3 days past.
Gotcha.
So my thought is this selling, nobody else selling. If it breaks through here, it's going to be a buy stop to take it to this edge. Simply because all these sellers are going, well, crap, that didn't work. I guess I need to cover. And so this is the noisy patch. And if it gets up over there, the buy stop seems fairly valid. What do you think?
Yeah, let me switch over to my chart really quick. I just put this on in a practice
Oh,
account because I'm kind of measuring out what
yeah.
the risk would be. So we have this gap up here, and
Okay.
watch this thing just go without me now. But I'm looking at a 30-minute chart. So we have a 30-minute, first 30-minute candle is closed. I'm looking at buying anywhere inside that first 30-minute candle, and my stop is about halfway through this gap open that we had. And why the stop is there is because if we look at this 30-minute candle here, this high volume candle here, right? So if we come back and test that, then I'm okay getting out of this trade. But like you said, the targets to the upside would be first having to clear uh, 3,560, which is this handle here, right? So
Yeah, yep, yep,
that would
yep,
be my
yep.
initial target, right? So if I was watching this trade, I'd probably manage the position there. And then if we break and hold above that, then I'm looking for uh, this candle here, which is at 3,640, and that would be the ultimate target for the trade, right? So
Yeah.
trying to think
Yeah,
of
that's right around that space. Yeah, I see that. I see that because that's right about where all that heavy congestion sits. And just a little bit higher is the top of the high volume candle on the hour. So I'm staring down this 15-minute to look at these spikes, and they look pretty good. They're just still too fast for me because I'm, a slow poke.
that's fine. I mean, if you're entering a trade on that hour, that means you can probably hold on to your trades for a little longer as well, right? Um,
Yes?
but I if we come back, so what I'm looking at now is just improving the risk to reward on this a little bit. If we come back and test the high of this, if we come back and test
The VWAP
three
right
five,
there.
yeah, if we
Yeah.
come back and test 3,520s, um, actually let me just switch over to this XFA and I'm gonna put that trade on. I'll buy here and I'll set the
I
risk to
like it.
about $400.
I like it. Yeah, that's nice. Yeah, nat gas is only they are only calling for about, gosh, what was the vol on that? I think it was like 70 ticks for the whole day. So,
How many
yeah.
markets do you look at, Emery, for those expected moves?
I don't normally look at
All of them.
anything that anybody asks me to, but in the morning I look at the ES, the NQ, the YM, micro Bitcoin, CL, and gold. And
Okay.
those are the futures markets that I run. I also do the SPY and the Qs just so that we could see if everybody's tracking together. So I normally have my eyes on um at the SPX to see
Okay.
where it's running, and so that's those are the ones I have every single morning, and you can just if you're a trader and you're like, "Oh, I wonder what those levels are today," scrub through the video in the morning and just go, "Oh yeah, I'm only interested in the YM, or I'm only interested in the NQ, or I'm only interested in gold or whatever," and just get the pieces. And as long as you realize that none of these lines are set in stone, it's just what traders with big money have said, okay, I'm going to run those markets. And see what's happened in the recent past is traders have been so sloshed around with the tariff news and tape bombs coming from all over the place. They really are leaning on the math. They're just saying, okay, what does my Black-Scholes model say? What does my binomial model say? And they're leaning in to that math because they're trying to force the market into the ranges. Now, sometimes it happens, sometimes it doesn't. I mean, yesterday or whatever day I was on, I can't remember what day I was on last. I did a Bitcoin long, and I I took it on the low because it fell through the expected move. And then
Okay.
it started stabilizing. And I said, okay, it's going to try and get back inside of that move so those traders don't lose money before the end of the day. That's more likely. So I had a cheap long into that space because I could see, all right, it fell through the expected move. It should come back, or we're going to have a great big flush. And if we have a great big flush, I can either turn around or I get stopped out with a very small loss.
All right, let's see if we got any other questions for you, Emery, in the chat. I know we are coming up on an hour here. If you guys measure the initial balance, from what time do we measure? 6 p.m., 7 p.m., 8 p.m.? I believe those are Eastern time, the trader's asking
Here's
about?
here's the beautiful thing.
Mhm.
These expected and implied volatility moves are available once the market closes on the night after. So let's say you're like, man, I got to get my expected moves together. You can go at 4:30 in the afternoon, after 4:30, 3:30 Central, 4:30 Eastern, and the expected moves and the implied volatility will be sitting there. What do you use? Closing price. Whatever the closing price is and the implied volatility is, you just add the implied volatility measure to the closing price and you set them up. Bob's your uncle. They're ready for you tomorrow. So if you go, hey, I don't want to do a bunch the same day, I'll set my levels up tonight, and then when I come in the morning, I know where the levels are. I can take a breath, do a little bit more. Somebody asked, what impact do you think the company buyback programs have on the overall trend of the market? They have a lot. They have a lot. There are, golly, I forgot the number, billions and billions and billions of dollars in buybacks that are scheduled every single quarter. It is the artificial way of a stock, of a company boosting its price level. Well, there's a law that says you got to stop buying back before X. And I think it's like 20 days before the next earnings cycle begins, but I can't remember for sure. So it matters a lot. You can see ebb and flows. So take a look at a stock buyback. Just ask Chat GPT. Good grief. Hey, when are the big stock buyback dates? Or tell me the stocks that have the largest buybacks in the NYSE. And you'll see that they do. They have a tremendous amount of effect on the market.
So if I did get tagged into that natural gas long, so I'm long from 3.5
Nice.
20, risking about 400 bucks on this. Just if we get back into this gap that we had, I've
Oh,
seen
I think
natural gas.
momentum's yeah, momentum's definitely in your favor.
Yeah, looking good. We've seen natural gas have these kind of weekly Sunday opening gaps almost every week, and it does it come back and fill them every once in a while. So if it wants to fill this gap, then I'll get stopped out of this trade. But just looking for a continuation in that direction and not risking a whole lot on it. Any other markets you want to discuss, Amory?
No, I think we covered it. I've got, everything for us to look at. Just keep your eyeballs on it and don't use the lines as, you know, something in stone.
Right.
It literally is throw some salt on the table and blow on it. That's about how strong those lines are if something is actively in the place to shove it out of the way. And we don't know until we see the traders act. And so that's what we're staring down. If you want to build out your own measured moves for your opening trade as it comes into the 7 p.m. Eastern time, then you go to your long position, short position, draw a line around it, and then you can use these boxes to give you the relative targets. It's really nice and clean. You wait for your setup so you're not chasing the market. And if it comes to you, great. If it doesn't, listen, market is a buffet. Your delicious lobster, caviar, whatever you like to eat, it's going to come around again. Just be patient. Just be patient. Jay, thank you so much
Oh yeah,
for taking the time
for
and
sure, Emery.
getting me on screen. I'm just such a putz with technical things. I was like, Jay, can you come on with me tonight? Because I forgot everything Gabe told me. So I'm
I
gonna go
got you.
find that video for sure.
I got you. I do want to just go over real quick what we have as far as planned news. We know that the planned news has really been taking a backseat to unplanned headlines. We got uh, tomorrow. Is that tomorrow? Yeah, today's the first. Tomorrow we got S&P manufacturing PMI number, ISM manufacturing PMI number as well. Uh, Later in the week we have JOLTS on Tuesday. S&P Services PMI numbers on Thursday, as well as jobless claims, and then NFP. Right, it's the first Friday of the month, so
Yeah.
NFP on Friday. We may see, some of these planned headlines, Emery, and I don't know how you've been paying attention to them, but feels like they have kind of lost their effect on the markets somewhat, right? Where, you know,
Little bit.
what moves us now is a tariff headline, right? Not a jobs number or
Yeah.
anything like that. Has how it was all
Yeah.
last year. Um, so I think traditionally what we would say is if we have NFP later in the week, we may see some consolidation in the equities before that. But a headline
Yeah.
can come out at any time, right? A tweet can come out at any time.
Yeah.
So
For
I
sure.
don't know that we can say that the same way as we normally would, but a couple of planned headline numbers out this week.
There's some big things happening in the European markets this week also,
Okay.
and my brain cannot remember exactly what they are, but there's some stuff going on in the EU. And I think now that they've sort of kicked the tariff can down the street, it's gonna be one of those spaces where I don't know, I think we'll sort of get tone deaf to tariff news and then real news will start taking over. That's my gut
Yeah.
anyway.
Yeah, it's starting to seem like that, right? Where I can't remember what the headline was last week, and that kind of goes to show you how many headlines we've had. It was the the president wanting to ban any of the chip makers from selling in China, and the market sold off for about 20 minutes, and
Yeah,
bounced right
and
away,
then
right? So
turned right around.
yeah, so
Yeah,
uh,
absolutely.
maybe the market
Yeah,
is not caring as much as we once did. We can continue to see it rally, but of course, markets are going to tell us the story. We just got to follow it.
exactly. They always will. They always will. Hey, thanks for all the chit chats everywhere, folks. I just love it. Um, awesome. Nice stuff.
Think we got through all the questions. Spoke about a bunch of different markets. If you guys want to, you can rewind and see what Amory was talking about. Also in
Yeah.
Discord, she does post that video. I posted the link to Amory's Discord in the chat. So
Thank you.
no problem. I'll post that again actually, since it kind of ran away from us. But that's Amory's Discord if you want to look for the videos that she was talking about. Um, Trade well, everybody. Manage your risk. This was a lot of fun, Amory, and I'll see everyone on Topstep TV tomorrow for fast markets.
Yeah. And I'll see everybody on Lunchbox Trading. So it'll be fun.
Here
I'll
we
see you
go.
tomorrow.
All right. Enjoy the rest of your Sundays, everyone, and we will talk to you all soon.
Thanks so much. Bye, everybody.
Bye.